Anthony, great to be here with you. Thanks for joining us. And it's interesting, in the earlier discussion, we talked about the alternative asset industry. You mentioned things coming in and out of fashion, Skybridge looking to democratize the industry, and then you are worried about SPACs. What about the venture capital, the private venture capital industry? Where, according to HBS professor Paul Gomper's 2020 survey suggests that the industry believes that their investments, 91% of venture capitalists believe that their venture investments will outperform major equity indices going forward, and are expecting funding to continue and potentially increase into private venture capital assets. What do you expect to be next for that particular subset of the alternatives industry?
Well, Boris, first of all, thank you. It's very hard to answer the question, because when you hear people saying that, you hear the number 91%, I get scared. And then I think we could be in a 1999-like cycle. And so if you put money into a 1999 venture capital vintage, you likely got your money back maybe, or you maybe lost a little bit of money. But then if you put it in 00 or 01 or 02, after the markets collapsed, you did very, very well. And so what I would tell people, we're going to go through a cycle. Venture capital will go through a cycle. Crypto goes through a cycle. And right now, the venture capital cycle is booming. It's going straight up like this. If 91% of the people think that, I would worry. I'll tell a very quick story. In 1995, 6, and 7, the U.S. stock market, the S&P 500, went up about 30% a year. And Fidelity surveyed their investors, and they said, okay, you're a mutual fund holder at Fidelity. What do you think your next 10 years of returns will be? And everybody said 30%. And so then the journalist pointed out, well, if that were the case, you'd own the world from the value of the compounding. And so, of course, that didn't happen. And by March of 2000, those indices retraced, and we had a reversal in stocks and a reversal in what was going on in the internet. So I think we're in a boom right now. A lot of that is liquidity driven. Remember, this Fed opened up the spigot to try to protect the overall economy. That's right. From the pandemic. And so it's flowing into different asset classes. It's flowing into crypto. It's flowing into venture. It's coming into the large, FANG stocks, if you will. So I think they're probably overconfident if 91% of them are thinking that. But here's what I will say. There's the next Amazon is out there. The next Facebook is out there. There's companies that are being developed right now in the what I call the programmable biotech, which is basically the intersection of computer software and AI with what we're learning about biotechnology. There's a company that's about to be formed. We don't know exactly which one, that will revolutionize that and perhaps lead to levels of longevity and health for people that everybody will have. Everybody will have it either being delivered to their home, or there'll be an app available on their phone that they'll be able to take information and diagnostics from. And so to me, I'm a long-term investor in VC. I'm a long-term investor in what I call the new economy. I think it's very, very, very Neolithic, if you will. And I don't want to be critical of Warren Buffett at age 90 or Charlie Munger at age 97, but I think it's Neolithic and somewhat backward looking not to at least study the new economy and to study what's going on with digitization. If you've got 3 billion video gamers in the world, yes. Well, guess what? There's going to be a lot of activity in the virtual world, and there's going to be a lot of value found in the virtual world. Whether you like that or not, or you think that shouldn't happen, I'm about believing about the world. Deal with the world the way it is, not the way you want the world to be or the way you think the world should be, and then react to it that way.
That's very interesting, Anthony. If I was to take a couple of themes from what you just shared and drill down on that, if you don't mind. So one is what is happening in the private markets. And one of the things that's alarming you is, let's say, 91% of the venture capital investors being so confident, so overconfidence. What other things do you look for personally that are triggers for concern for you in private assets? You talked about, you didn't refer to lemmings, right? But you referred to, fat being in and out of fashion, things seeming to be in a bubble just because of an excess interest. How else do you think about there being too much focus on an asset and it being overvalued?
Well, again, I think there's a lot in the short term. Okay, so one of the things is consensus and crowd thinking. I believe that there's wisdom in crowds. I don't want to say to always go against the crowd and be a contrarian. The market is usually a good combination of averages, and market has a lot of information, so you have to be wary. But if you told me there was 91% bullish sentiment in the stock market, I would say, okay, that's a good sense that everybody is fully invested. And so therefore, I would be worried about the market. Back in March, my old mentor, Leon Cooperman, this would be March of 2020, at the end of March, he called me. He was extremely bearish about the markets. The markets had just gone down 24%, and your bearish sentiment had gone over 50% at that moment. And he said he was very bearish because of the uncertainty related to the pandemic. And he was very bearish because there was going to be a lot of business closures and hurt on global real estate. And I said to him, that's all true, but the Federal Reserve, if it responds similar to the way it responded in 2008 with this quantitative easing strategy and this excess liquidity, the markets are going to trade up. Now, whether they should or should not, that's not for me to judge. It's for me to actually just analyze what's going on. Of course, the Fed opened the spigot. Over $6.5 trillion flowed out of that spigot. They added just under $3 trillion to their balance sheet. You've got money that's been literally put out into companies through PPP, or money put in the hands of people from a stimulus perspective. All of that stuff has flowed back into the markets in one way or another. And so what I would tell you is that was the time to buy. All that bearish sentiment was a time to buy. I think as things become more and more bullish, I think you have to be more cautious. And again, these are caution lights in the near term. You know, if you're a 10 or 15-year investor, you can ride out those storms. I don't believe in market timing. We've made our money here just being steady Eddie. You know, if you looked at our returns in April of 2020, you say, okay, well, you guys stink. You were down 20.
But it's just a point in time.
I understand that. But now if you look at our returns, if you stayed with us, we're up 46% from the bottom. It's just holding the assets that we knew were fundamentally good, but they just got technically oversold by the panic. And so for me, I tell people you have to be long-term. When you grow up in a blue-collar environment like me, and you're in the middle class and your parents have no money, okay? I mean, they're living paycheck to paycheck. You learn a lot about patience, and you learn a lot about, there was an expression my grandfather once had, I'll share with you guys. If you can't afford the ticket, don't go to the movies. Okay. And so if you can take that discipline to the markets, meaning, you know, don't leverage, can't afford it, stay long-term, buy good quality fundamental things, whether it's VC or private equity, don't outsmart yourself. You know, I have friends of mine, I tell them, buy Bitcoin. Why do you have to buy Dogecoin or XYZ coin or ZYX coin? Just, you know, buy the industry leader. You know, you don't have to buy the Amazon knockoff. Just buy Amazon or buy Apple.
Buy the industry trend, right?
Yeah, and stay in it. You know, I'm about buying quality. The same way, you know, if you look at the people behind me, I want to try to invest in people that are way smarter than me.
Yeah.
You know, I mean, ultimately, that's how you're going to make your money. And then you give those people tremendous amounts of responsibility and tremendous amounts of autonomy. You got to do the same thing in your portfolio. Don't be the jaded person that, oh my God, I missed it in Amazon. You know, I have buddies of mine say, well, I missed it in Bitcoin. It's at 55,000. Okay, but Amazon went from 2000. If you bought Amazon in 1997 on its IPO and you held it to today, a $10,000 investment is worth $21,140,000. However, you had to subject yourself to 7 situations where Amazon dropped more than 50% of its value. Right. If you look at Bitcoin, Bitcoin has gone down at least 12 times, at least 50%. But if you bought Amazon in 2009, 12 years after its inception, and you looked at the chart, you say, okay, I can't buy that, it's too expensive. And yet if you bought Amazon in 2009 and you held it to today, you have a 64-to-1 return. So I just want you to think about that, because Bitcoin, from an exponential growth point of view, is pursuing and tracking Metcalfe's law. I remember what Professor Metcalfe said: there's value in the exponential growth of the network. You can actually measure fundamentally what something's worth by how quickly it's growing. If Facebook starts out at 10 users and now has 2.8 billion users, there's no wonder that Facebook has this type of scale and market cap. And so my point is that it's very early in Bitcoin, the same way it was very early in Amazon in 2009. And I would also make the case for Amazon today, for that matter. I think Amazon's best growth is actually ahead of it. It's just that now more institutions have accepted it. I watched people hate on Amazon 10 or 15 years ago the way they're hating on Bitcoin today. And I think it's a mistake. I don't think you should begrudge something that's happening that you think is surreal, because it's actually happening and it's facts-based.
Which is interesting in that, in looking at long-term trends, it, as you're suggesting, pays to be on top of the trend overall, as opposed to a specific participant in the trend. So you've outlined how you're thinking about Bitcoin. How do you generally think about the right areas, the right industries, this long-term perspective, right? If it's 10 to 20 years down the road, right? And if it's a long-term perspective, it's a buy and hold and wait for it to appreciate, then certainly got to pick the right trend. So what are the parameters for you to suggest that the trend has matured enough to be riding that trend?
It's a really, really good question. And so I don't think anybody has a scientific answer to that. I can only go by my intuition and my investor experience. I took notes from a Winklevoss twins meeting. So this is Cameron and Tyler. They bought their Bitcoins 10 or so years ago, and they were explaining to me why they were owning it. And I said, okay, that's probably going to work, but I am an institutionalist and I'm managing money here for high net worth individuals and fairly large institutions. And so I can't take the risk at that nascent stage. And so what I wrote in my notes is, if Bitcoin got to 100 million users, then it was actually arcing the way Amazon did. It's becoming a monetary network the way Facebook became a social network, the way Google became an advertising and information network, and it's scaling. The way Amazon is, frankly, a retail network. And so once it got to 100 million users, to me, I felt that we were there. It had reached escape velocity. Now, Mohammed's asking questions about Dogecoin in the Q&A, and he's asking questions about XRP, etc. I'm not the best person to ask about those, because they may in fact work. They may in fact work, but they may in fact not work. Okay, and so I can't assess those. Bitcoin, which has 50-ish% of the market cap of overall crypto, I think it's already proven itself. And so I don't need to make what I call the country club money. What do I mean by that? I'm on the golf course and I turned to the guy next to me. I said, well, I was an early investor in Uber. I bought it at 5 cents and now it's worth $50 billion. Or I was an early investor. I don't need to be the early investor. I just want to catch after I know for certain it's going to be successful, I want to catch the interregnum move, if you will. And so I can't really talk about those. Ethereum is an interesting thing. We will have an Ethereum fund by July 1st. We're working on that right now. And I like Ethereum. And there's a lot of use cases for Ethereum, particularly with the non-fungible tokens. So it's no surprise to me that Ethereum is doing so well, because there's now become practical, real-time economic uses for Ethereum. Now, are there risks associated with these things? Yes. I'm not an evangelist for crypto. I don't think that Moses and Jesus got together and had a baby and the baby's name is Bitcoin. I don't think that. I am a skeptical and practical investor, but I'm somebody that's willing to embrace the new world and willing to understand where the technology is advancing in things like currency and storage of value.